one question we often get from our clients who are growing their business is, I want my business to grow, but I don't want to pay any taxes. It's a double whammy in a way where you want to grow, but hey, there's this thing that I don't want to do. So Dan, what are your thoughts on the topic?
Yeah, that's a great question. It's one that we see a lot. I recently just wrote a blog post about this. We can put a link in the video to that blog post. But here's the thing. Taxes are, in many cases, a controllable expense. A lot of clients and a lot of people don't look at it that way, but it is controllable. My experience going back almost 30 years now and being very deep in tax planning from the beginning is understanding how to layer tax strategies to reduce taxes. And if it's one thing I can drive home here is there is not a silver bullet. If somebody tells you that there's a silver bullet that's going to get rid of your tax problem, be very wary, and it's not out there. But we can layer in strategies that start to reduce your tax liability. And let's think about it this way. If your effective tax rate is 30%, so that means your income, you're paying 30% of your income in taxes. If we can reduce that to 25% or to 20% or even to 15%, that is a huge win. We are not going to get it to zero. That doesn't happen. There may be years that we get it closer, but it's through a concerted effort of different strategies and using those strategies together that we're going to be able to take it from 30 down to 25 or 20 or even 15 in some years. One thing that I want to drive home in that is also looking at your controllable cash flow. How much money can we move outside of your tax regime or make it pre-tax money, move it to other areas where it's going to be sheltered from tax? That's one of the important things through the proactive tax planning process. But Brandon and Alex, do you guys want to chime in on that? Do you want to share anything? Because I know you guys do a lot of planning.
Yeah, absolutely. I think something that I appreciate you saying is that there's not a one-size-fits-all tax strategy that you can use year over year that's always going to work. But when you think about your tax planning and what you're doing to limit your tax exposure, it's got to be a thoughtful process over many years as your business continues to grow. I just think that the more tax strategies that you have, the more you're going to be able to utilize over the year. And this is some place that we've been able to help a lot of clients is we have a deep resource of different tax strategies that we can apply to a variety of different situations.
Alex, do you want to share maybe a couple of the tax strategies that you like to use that you see really help clients?
Sure. So a lot of the tax strategies that we like to use are related to investments back into the company or protection for the company. So investing in additional machinery, equipment, investing in your people. Again, we don't really think about that as maybe a tax strategy, but you are able to deduct all of your payroll costs, and that's investing into your business as it grows. There's protection. You can set up different protections for your company and get a little bit of tax benefits that way. And like I alluded to earlier, purchasing equipment, investing in future productivity. Especially if your business is in manufacturing, then you can invest in future productivity, take the write-off this year, and grow your business that way.
What would be an example of investing in future productivity or processes?
So like if you're producing widgets and you have a widget producing machine that is starting to age and you have high taxable income, high cash flow, and you're looking at a high tax bill, buying a technology or future-proofed machinery that's going to cost you a little bit extra this year. It's going to hurt your cash flow this year, but it is going to reduce your tax liability.
Yeah.
But ultimately, you're going to yield the productivity and the business growth later. So It's a very simple and easy to understand method, but that's one of the most common ways, especially for manufacturers and people looking to invest in the actual infrastructure of their business. Another common and similar idea is purchasing real estate to operate the company out of. Again, it's a big purchase, and if cash flow allows, then you can use the benefits of real estate to offset some of your tax liability.
How about investing in new products or processes to make our products better? Is there what's the benefit of that?
So Dan's alluding to R&D, research and development, and so there is a very lucrative tax code section that allows you to deduct, not only deduct your R&D expenses, but then you get a credit for it. It's an advanced calculation. You know, there's a couple moving parts to it, and you have to follow some code sections, but ultimately you do get a net benefit to deduct your expenses and get a credit towards improving your processes, developing new products, developing better, more efficient products or processes, or just trying to find those. You don't have to be successful either. That's kind of an aside.
Oh, so we can invest in new products in creating maybe widget point A, widget point 1, and that may or may not be successful, and that may drive a research tax credit.
Yes.
And and a credit is better than a deduction.
Yep.
Because a deduction reduces our income, a credit actually reduces our tax.
Yep.
So it's even more beneficial to do that.
Yep.
Yeah.
And these are just a couple of the strategies like Dan alluded to. There's not going to be a silver bullet. There's not going to be one strategy that's going to wipe out your tax bill. But as we layer these strategies on, we can hopefully reduce your end tax result to 5, 10, 15%, and that'll be dollars saved.
Yeah, significant dollar saved for most of our clients. Yeah. So I know that Brandon alluded to we have a deep bench of strategies. I think currently we have more than 80 strategies that we work with, and we match those strategies to our clients' specific situation. So they're getting the best strategy. And what we normally find is in a given client situation, there's, call it 5 to 10 of the 80. There's 5 to 10 that rise to the top that are worth implementing for each client. And with each client situation, those are different. It's a different 5 or 10 that work. But that's how you navigate to Daniel's original question. This is how we increase profits of our business and navigate the tax side so that we can grow the business and not pay as much tax. But it does take time.
As the person who doesn't live in the tax world, and just hearing from the conversation, 2 things come to mind. One is a more effective allocation of resources, right? Because I think with certain strategies or certain things to reduce taxes, it's not like, again, going back to Dan's first point of we're not going to get it to 0, right? But we're going to use our money in a different way. Instead of paying a tax bill, we're going to invest that money into the business for growth and development into the future. So it's more of a reallocation of funds, more or less. Secondly, whenever I hear the word tax strategy, it makes me a little uncomfortable because of the mystery of what is a tax strategy, right? But as we're speaking, one thing that was clear is it's really, we like to be strategic in business decisions, in life decisions, of making a decision today with a planned impact of that decision for the future, right? And so it's really equipping ourselves today with, if I do this, what is this going to mean for my future self? That's really my takeaway of a tax strategy, as opposed to this thing that's nebulous, that's, what in the world is that? Is that too aggressive? Is that too conservative? Going beyond all of that stuff, it's really, what can I do today so that my tomorrow could be more predictable, as Dan first mentioned as well, of taxes being a controllable expense. And so those were my 2 takeaways, and I thank you all for chiming in.
Yeah, thank you.